Yesterday, Jack Dorsey, the man who created Twitter, fired 40% of his company, 4,000 people, gone. Not because the business was struggling. Block's profit grew 24% last year. He fired them because he believes AI can do their jobs better. And the stock market loved it. Shares surged 25% overnight. But here's the line that should worry everyone. Dorsey said, and this is a direct quote, "Within the next year, I believe the majority of companies will reach the same conclusion and make similar structural changes." So, is he right? Are we watching the beginning of the biggest workforce disruption in modern history? Or is this just corporate hype? Let's plot it out. AI-driven layoffs are not new, but they are accelerating. In 2025 alone, over 55,000 job cuts were directly attributed to AI. In just the first 2 months of 2026, that number has already passed 22,000. But context matters. Those 55,000 AI layoffs in 2025, they were only 4.5% of all layoffs that year. The vast majority of job losses had nothing to do with artificial intelligence. And here's where it gets interesting. Oxford Economics and Harvard Business Review both found the same thing. Many companies are blaming AI for layoffs that would have happened anyway. It's called AI washing. Sam Altman himself confirmed it last week. Of 108,000 US job cuts in January, only about 7% actually cited AI. So what's real and what's spin? Let's look at who's actually doing the cutting. Amazon, 30,000 jobs across 2025 and early 2026, the largest layoffs in company history. Microsoft, around 15,000. Citigroup is cutting 20,000 middle office roles through automation. Accenture, 11,000. Dell, 12,500. Salesforce replaced 4,000 customer support roles with AI agents. And now Block, 4,000 in a single day. At its peak in 2025, that's 427 AI-related job losses per day, every single day. But here's the uncomfortable detail the headlines miss. More than half of companies that laid people off for AI have already started rehiring. 33% brought back a quarter to half the roles they cut. 36% brought back more than half. And over half of them did it within 6 months. 31% found that bringing those roles back actually cost more than they saved by cutting them. 42% broke even, only 27% came out ahead. So the data suggests that for most companies, AI layoffs are not the efficiency revolution they were sold as. So which jobs are actually disappearing? The pattern is clear. It's not the jobs you might expect. Paralegals face an 80% chance of automation. Data entry, 7.5 million roles expected to vanish by 2027. Medical transcription is already 99% automated. Banking jobs, 54% have high automation potential. But the most alarming trend is what's happening to young workers. Entry-level hiring at big tech companies has dropped by more than 50% in 3 years. In the UK, tech graduate roles fell 46% in 2024, with projections for a further 53% drop by 2026. American programmer employment fell 27.5% between 2023 and 2025. Let that land. More than a quarter of programming jobs gone in 2 years. And the gender gap is brutal. In the US, 79% of employed women work in jobs at high risk of automation versus 58% of men. Here's a chart that tells the whole story in one image. The share of company spending going to freelancer platforms like Upwork and Fiverr has fallen from 0.66% in late 2021 to 0.14% in 2025. Meanwhile, spending on AI providers like OpenAI and Anthropic went from 0 to nearly 3%. For every pound companies cut from freelancer budgets, they spent just 3 pence on AI, a 97% saving. More than half of businesses that used freelancers in 2022 have stopped entirely. Freelance writing, coding, and design, the gig economy jobs that millions of people relied on, are being quietly replaced. Not with a press conference, not with a headline, just with a subscription. But before you panic, here's the other side. AI has already created 1.3 million new jobs globally. 5 million new AI roles appeared in 2025 alone, and the projections keep climbing. 6 million this year, 13 million a year by 2030. The World Economic Forum surveyed 1,000 employers across 55 countries. Their conclusion: 92 million jobs will be displaced by 2030, but 170 million new ones will be created. A net gain of 78 million jobs. AI-related job postings are growing 38%. Workers with AI skills earn a 56% wage premium. The fastest growing roles aren't what you'd expect. AI engineers, yes, but also data annotators, AI governance specialists, and AI operations managers. And here's the productivity story. In industries most exposed to AI, productivity growth has nearly quadrupled, from 7% to 27%. Revenue per employee is growing 3 times faster. Wages are rising twice as fast. So what does all this actually mean? The data tells a story with 2 truths that exist at the same time. Truth 1, AI is already destroying certain categories of work. Freelancers, entry-level workers, paralegals, data processors. These aren't future predictions. These are people losing their income right now. Truth 2, AI is creating more jobs than it's destroying, but the new jobs require different skills, pay differently, and aren't in the same places. A data annotator in Bangalore doesn't help a laid-off paralegal in Birmingham. And here's the uncomfortable bit. When Jack Dorsey fires 4,000 people and his stock jumps 25%, the market is telling us something. It's telling us that investors value companies with fewer humans. That's not a prediction, that's a price signal. The question isn't whether AI will reshape work. It already is. The question is whether the 78 million new jobs the WEF is promising will arrive in time, in the right places, for the right people. That's AI and jobs plotted. All data sources are linked below. Challenger, Gray and Christmas, the World Economic Forum, Goldman Sachs, PwC, and Block's shareholder letter. I want to hear from you. Has AI affected your job yet? Have you been laid off? Or has